Hi, Reality Riffing. This conversation with Invest Diva, as she's aptly named, Kiana Danial, was really just an amazing opportunity to deconstruct some of the jargon around investing and give you some real life tips on where to get started and how to get started and what her journey has been as a young woman who wanted to teach herself how to invest in the stock markets and invest her money in an intelligent way that was going to give her opportunities and freedoms. And she really got so good at it that she has started her own business. She's written multiple books about how to invest and how to use digital currencies, cryptocurrencies, and other means to be intelligent and not feel like you're outside of the world of financial agility and investment opportunity. This conversation was incredibly grassroots and instructional and really offers an opportunity for anyone who's interested in being self-taught around investments and around the financial sector to get a no barrier to entry experience. Welcome back, Rama Business School. I'm so excited to be joined by Kiana Danial. She's the founder of Invest Diva, which I love that name, Kiana. And I actually found her on TikTok because she's giving wonderful advice on TikTok, and I love your the way that you're using that platform. You have a really interesting story, which I'd love for you to share with everybody. And then you are also the author of 3 books, including Cryptocurrency Investing for Dummies, Invest Diva's Guide to Making Money in Forex, and what's the third one
magic
here?
word. It's Ichimoku secret. Nobody can pronounce it actually.
Tell us about that. Okay, so tell us about that, and then give us a little kind of talk us how you got here into your current work.
Of course. So the Ichimoku part of it, that is a Japanese word. And the reason why it's there is because I lived in Japan for 7 years. I speak Japanese, and Ichimoku is a financial instrument that I got to learn, and that is what I use when investing. But that is not, that is great. But my background actually started from back in Iran. I was born and raised to a Jewish family in Iran after the Iranian Revolution, when the new Iranian regime took over. And my dad, before that, he was a very successful CEO of this construction company. He was working with the Shah. And after the revolution, they took over all of his assets, and they were actually going to kill him. He locked out on that one. But because of everything that happened, I was born and raised with very little. And once I turned 18, I went to Japan to study there, and I had no idea about money. I didn't know anything about it, and I just started hearing about financial crisis back in 2008. I didn't know what it means. I'm like, that's okay, interesting. I don't care because I'm not in this world. Money is bad anyway, right? So I didn't care about it, but that was my mentality. I thought money is something that you shouldn't even talk about. The only thing that piqued my attention at that time was that I was in Japan. I had some Japanese yen saved. I went back to the ATM the next day, and the US dollar was even cheaper than the day before. I was like, oh my God, I should have just waited a day. And the next day was even cheaper, and the next day was even cheaper. I'm like, how low is it going to go? How cheap is it going to get? How can I just automate this? I don't want to go to the ATM every day. I just want to buy at the cheapest price. So I was talking about this with my Japanese host family mom. And she's like, oh, you know what you can do? You can. And then she started putting out all these words that I didn't understand what she said. But
Right.
now I know what she did was put my money in the brokerage account and told the broker to set a buy limit order and short the dollar yen. It's technobabble, but I made $10,000 on it. I'm like, oh my God, this is so cool. And
So how
that's
much
how
did you start with? How much did you start with?
I put $10,000 and I doubled it within a month. And
Okay.
what I did was super risky. And I do not actually, I didn't know what I was doing. I got lucky 100%, but that was just enough to get my interest going. I'm like, oh my God, there is this world out there that I can actually make $10,000 per month. And as a college student, that was a lot of money for me. Like, oh my God, this is so much. So that's how I became interested in finance.
Wow. And so, okay, how old were you? 19 then?
No, I went to Japan when I was 18. This happened when I was, this is going to give away my age.
Good.
Uh, 20, 23. I was in master's. Yeah, 23.
Okay, great. Well, you already gave away your age because you said in 2008.
It's
In
public
2008,
knowledge
you
anyway.
didn't care about the financial. I was like, okay, well, you look great. You look. I mean, obviously, I knew you were young, but now I know you're really young. Okay, so then you started to what? Where did that take you?
So what happened is that what that really taught me was the power of investing in the financial markets. And I just became curious to see, okay, what's happening? There's a financial crisis, the global market is melting down, banks are going out of business, and I make $10,000. Like, in what world is that even possible? Because I suck at math. I know nothing about finance. So I became curious about what happened and how did this even work? Why did the US dollar even go lower? And it turned out is because there was a recession. The banks, central banks of the US started printing money. Printing money kind of saves the economy at that time, which is what they're doing right now, by the way. But what that means is that it devalues the currency.
Yeah.
And if you're not investing, so that was very powerful to me. If you're not investing your money and you're just putting it in the bank, that means that 10 years from now, your future is going to be expensive because your money is devaluating. And I was like, oh my gosh, so I have to invest. What can I do? I don't know anything about it. Maybe I should just go give my money to a money manager and do it for me, because investing is obviously, it's very powerful. If I don't invest, my money is going to depreciate. So I did what any logical person would do. I was like, I knew I got lucky the first time. I'm probably not going to get lucky the second time. I give my money to a money manager. And I thought, okay, it's their freaking job. They're going to rock and roll it for me, and they're going to make a ton of money for me. But that's when things started to, again, go south from there. I did some more research. I found out that these money managers actually underperform the market average by 86%. Not only that, they actually invest your money in things that make sense for them because they are getting paid by the commission, and it's in their best interest that you invest in things that makes their partners money, not necessarily you. Worst of all, they lock your money up. So if you need money at an emergency, you're not going to be able to actually access it without a penalty. And this particular money manager, they had a 75% penalty. And so years later, I decided to go to Wall Street and start a career there. I got fired. I needed the money. I couldn't touch it because otherwise I would have to pay 75% penalty. Eventually, I actually did end up paying the penalty because I was like, you know what, this is just ridiculous. I want my money in my own hands. But I became obsessed. I was like, I obviously need to invest. Money managers don't have my best interest. Wall Street is toxic and it's just so male dominated, and they don't give can I swear on your TV?
Oh,
Crap
please
about
swear. Crap. Can you do any better than crap, Kiana? We have to keep the ratings up.
I'm not sure who's watching.
We got to keep the ratings up. Can you cuss a little bit more than that?
Right, 100%. So they don't give a, I don't want to say it. They don't give a fuck about the individuals. It's all about the corporate, and that's how I ended up getting fired anyway. And I was just so pissed off. I became obsessed. I started studying for the Certified Financial Planning, the CFP and CMT, and all these C levels, blah, blah, blah. And I was like, oh my God, this is actually not that hard. Like, why were they making it sound so intimidating that nobody else can do it by then? Because if they make it sound as easy as it is, they will not have any customers.
That's right. That's right. Does everybody hear that? And I just, Kiana, I have to yell at people on the chat because there's a live chat happening right now. Kiana did not say anything about women being bad at math. She said she was bad at math, and so she didn't think that she knew how to do this. And this is the story of her finding her sovereignty. So keep up with the story, people. Okay, go ahead, Kiana.
I'm so glad I'm not looking at the chat again.
Oh yeah, I'm glad you're not. Don't worry, I'll yell at people for you. I'm right here. Yeah, I'm fierce. Go ahead, you keep going.
Right. So the funny thing about that is that, yeah, the reason why a lot of women are not investing is because they think they have to be good at math, and some women are. My sister is fantastic at math, My dad is an engineer. I even studied for engineering, but I suck at it. I just did.
Yeah.
It just is the reality.
Yeah.
And that's why I was so intimidated to do it on my own.
Yeah.
And it turns out really investing the amount of math that you need is fourth grade.
Yep.
I coach thousands of people right now. Not a single day do I use any math, probably like maybe around 2 plus 2 is 4. Like that's the level. I don't need the math. I really don't. As long as I know like 100 is bigger than 50, then I'm good. So,
I mean, and I think this is just an important point on all levels of numbers. People have all these ideas about, like you had, I'm not good at math. I'm not going to be able to, I won't be able to understand investing or understand business. No. People who are good at this kind of stuff are logical people who know how to do, as you say, under fourth grade math. This is how much money are you spending or how much money are you making? What's the difference and how can you maximize it, basically? I mean, this is logic in many, many ways.
And you know what? At the end of the day, if you're really stuck, I guess you all have some of this in your pockets. Just bring it out. Punch the numbers in. It calculates it for you. Your smartphone is very handy, so you don't have to do it on your own. But there is something about women here is fascinating, is that actually research after research after research, and this actually pisses a lot of guys off, shows that women are actually better at investing. You know why?
I think it's because we're more intuitive, but you tell me what you think.
That is one part of it. 100%. We're more intuitive, but because we are not driven by testosterone. A lot of men, they get into the markets and it's like a game for them. It's like, oh, I'm going to win. I'm going to lose, win, lose, win, lose. For us, if we do get into the market, it's because we're looking, we have this maternative kind of thing in us that things for us are a little bit more long term. I'm not getting into the market because I want to win over you. And I don't care if you make money or not. I would love it if you make money in the market. For men, it's like a battlefield.
Right.
So if they make a loss, they get emotional about it. And it's funny because when I bring it up, a lot of guys are like, well, women are emotional. I'm like, well, yeah, everybody, testosterone is emotions. Mm-hmm. And our emotions actually works for us when it comes to investing because we got emotional, we doubt ourselves. We're like, oh my God, I did something wrong. We don't jump back in and make it like a gambling. Right. We're like, oh my God, maybe I should go educate myself. And that's what happened to me. First, when I got started, I did lose $15,000 because I was just doing trial and error. I was just listening to the market noise. I didn't know what's happening. And that got me, I was like, okay, I have to go and educate myself. So I went and studied for CFP, CMT, see that, see this. And I educated myself. And now I manage my husband's money, and he's an actual rocket scientist. My dad's money, my sister's money.
I love that you're married to a rocket scientist. Power move, Kiana. Power move.
I know. I was like, I didn't make it as an engineer. I have to marry into it.
Yeah.
So that's the secret, you guys. Women are actually better. So
amazing. Okay, so I'm really curious, obviously, how you think, well, first of all, how in this kind of economy someone can get into the investing and being intelligent about it. That's my first question. And then obviously I want to talk to you about crypto. So let's start with the first thing. Can you give some kind of, it's a interesting economy. It's going to get most likely rougher than it is now. And these are obviously always opportunities. Give us some tips.
So the interesting thing is that recessions actually make the most millionaires. And that is when I first made money in 2008 as well. But of course, a lot of people suffer. And right now, this recession is a little bit different than the previous ones because the unemployment rate is just to the roof. And then it's becoming politicized and then people are going out. So there is a little bit more unknown to what is happening that there normally is. But if history is there to teach us anything over thousands and thousands of years, is that history is going to repeat itself. We're going to come out of it.
Right.
And the first thing that anyone needs to know when getting into investing is knowing your risk tolerance. If I tell you, oh my God, recession is going to make millionaires, don't go and put all your money in, I don't know, some sort of airline stock because you heard about it or because somebody told you. This happened actually back then with Bitcoin as well. People heard about it. They just put all their money. It's not how it works. No matter who tells you and how passionate they are about a particular thing. And I get passionate about particular stocks and cryptocurrency and all these things, but that doesn't mean that that is going to be suitable to you. The reason why I lost that $15,000 back when I was on Wall Street and I was listening to all these gurus and I was actually on the New York Stock Exchange and everybody was telling that hype, FOMO, is because that was working for them. But guess what? They were like billion-dollar hedge funds managing other people's money. And I was playing around with my $15,000 account, making all the same moves that they were making. It doesn't work that way. The first step always is to know your risk tolerance, understand your financial goals. And it's so important that you know how much you should be investing. Like you're like, oh my God, okay, I'm going to take all my 401k out, I'm going to put it into investing. It might make sense for you, but it also may not. Like for us, even as a family, for my husband, I was like, you know what, you keep your 401k, I'm going to take it out, I'm going to invest it, because that is how our family kind of worked out because of my situation and his work and my work. For somebody else, it may or may not really make sense. So these are the steps you have to take. You cannot just jump over it. You may get lucky and make some money, but you're not going to be able to continue it. Like I did make $10,000 when I first traded and I was out of luck, and then I went and lost $15,000 just because it was just trial and error. You're going to save yourself a ton of time and energy and money if you do it on the right foot. And if you actually understand your risk tolerance, plan it, have an investment strategy, learn about it, understand what type of assets is going to be suitable to you. It depends on your age. It depends on your ability to take risk, your willingness to take risk, and your goals. And then you can go ahead and just dive in. And then it's going to be just, 15 minutes per week. So just do it right. And then you're going to be gold.
And do you suggest that people manage like a Fidelity account, or they're managing their own portfolios? Is that, kind of that hybrid portfolio management where you're able to have more flexibility? I mean, what's your suggestion around that?
So once you get comfortable, again, I cannot tell you what to do because it really depends on how much time you can put into your education. I have made it, I think, easy enough for anybody to be able to just be in charge, because the commission that you're going to pay those managers, why not just put it back into investing? Like, that's just my thing. Once you get a hand of it, you're going to be able to do it on your own. So eventually, as you get more comfortable, probably you can bring it all in under your own portfolio. But at the beginning, it really depends on how comfortable you are, and hybrid is probably fine too, but you can start investing from anywhere, any brokerage for sure.
And someone is mentioning, because we have people all over the world tuning in right now, that they feel like this is U.S. This conversation is more about the U.S. markets, but I mean, certainly crypto is not. And do you have anything to say about that? Because you're an international person.
Right. So first of all, you can invest in any asset at any place in the world. I have students from literally all over the world. And normally when the recession happens, you can first of all hedge. Personally, right now, I'm hedging with international assets, Chinese assets. It really depends. And if you are international, if you're in Australia, if you're in Eurozone, if you're in Saudi Arabia, wherever you are, you can first of all invest in US stocks anyway. And you also have local assets that may make sense to you. And then, as you mentioned, cryptocurrency, it knows no borders, which is one of the reasons why I have become interested in it.
Mm-hmm.
But the strategy that goes along with any type of asset, the steps that you have to take is basically the same. You first have to understand that asset. Like when I talk about cryptocurrency, and the reason why a lot of people lost money back in the day when there was just hype was because people didn't know what they're getting themselves into. as the market was going up back in 2017, everyone was like, oh my God, Bitcoin. Have you heard of this thing, Bitcoin? And it was, oh my God, like my friends who was never, ever interested in investing, like, should I buy Bitcoin? I'm like, you're not even interested in like doing I would love to teach you, but don't go and just buy Bitcoin because you heard somebody like your Uber driver talk about it.
Yeah.
That's not how it works. Understand it, understand why you're getting into it, support it, because when you invest in any asset, you're supporting it.
Yeah.
And investing is political. So the companies that you're investing in, you want to go find out what their support, because you're ultimately putting your money betting that they are going to get better.
Yeah.
So all these things that you have to consider are super important.
And so in terms of crypto, I think all my crypto friends have been saying five coins just came out that are, really, I guess, kind of important if you want to, get the next kind of phase of cryptocurrency. Like, where do you think we are at with the cryptocurrency conversation?
So cryptocurrency the conversation has been very slow after the crash, which is great. I feel like 2017 was awesome because it brought attention to it, and then ever since, all the work has gone back to the back end. People are working on the facilities and bringing in new cryptocurrencies and making it better, so that we don't have this kind of like dot-com bubble kind of
Yeah.
jump.
Yeah.
Personally, when it comes to cryptocurrency, I have written a book about cryptocurrency investing for dummies. Things do change pretty rapidly, but what I have done is that I've diversified my portfolio in cryptocurrency, and just like I do with stocks. And I basically am sitting on it. I'm not actively trading it, even though there are people who are actively trading it, and it does follow the same market psychology
Mm-hmm.
as other assets. But for me and my level of risk tolerance, I have a baby at home and I just don't want to be too attached to my screen all day. I have basically diversified my portfolio and I'm looking at it as at a long-term investment. So to me, that makes a lot. And as it goes down, every time it dips, I just buy a little bit more and I'm waiting it out so that it goes back up. So I'm chilling with crypto at the moment.
But you do think that ultimately, as a long-term investment, there's growth there.
The reason why I think that the answer is yes, and the reason why I think that is because, especially right now with the recession, and you can see again, the government is just printing money. It's just printing money out of thin air.
Mm-hmm.
Where is it going to take you? Whereas, at least with Bitcoin, it's absolutely decentralized. We know exactly how many Bitcoins are ever going to be out there. And there is the rule of supply and demand is just going to work out a lot better for something like Bitcoin. Even if you compare it to gold, nobody knows how much gold we have. People like there are speculations there's gold, down deep in the sea, that there's so much gold that if they find it, it's just going to make everybody a millionaire, where there is a catch there, because if there's a lot more supply of gold, that means the gold's value is going to go down. Bitcoin
Mm-hmm.
is not that way, because there's always only going to be the certain amount. I think it's 21 million. I don't know the exact number right now, but that is it. That's it. That is the all amount of Bitcoin you're ever going to get. And then as the population goes higher and as the demand for it goes higher, obviously it's going to become more valuable. So that is
Interesting.
basically the reason why I believe there is value in Bitcoin. And then there are different kinds of cryptocurrencies. Each of them are optimized for a different thing. Like Bitcoin is designed to be gold 2.0, but is not the best in terms of transaction. It's not the
Right.
fastest, not the cheapest. Then we have other cryptocurrencies that are optimized for each of these things. And that is why I have a diversified portfolio, because it's kind of like the wild, wild west yet. Still, we have 2,000 cryptocurrencies. We don't know which one is going to be the keeper. And out of dot-com bubble, we had like Amazon and Google, like a bunch of these companies that came out as the winner, where the rest of them went bust. And I feel like the same is going to happen in cryptocurrency. So there is obviously risk involved.
Yeah. Yeah. And it's quite fascinating following this stuff. I was reading some article about basically how how Yahoo came out of the dot-com bubble and kind of reigned for a period of time. How it was able to be successful, and this guy Mark Cuban bought it, and it's just I mean, this stuff is interesting, and also interesting to just follow these stories and educate yourself. I think also on histories, because there's trends. I don't know about market trends exactly, because I think we're in unprecedented time, but I do think that just paying attention to what's going on in terms of what's being valued is an interesting part of, I think, education as a citizen.
Yes, absolutely, 100%. And it is interesting that these things are actually not taught in high school. The reason why it is not taught is because, again, it's in the benefit of the governments that people don't know, so that they train us to become corporate workers so that we pay more taxes. And if we're investing, then the whole Wall Street and the corporations, they're not going to have as much jobs. So it's a whole system that is put out there. The best thing you can do, as you said, is to educate yourself, read the history, because all these stories is just going to give you a glimpse of what could happen in the future as well. Because history just repeats itself in different versions.
It does. It does. Where do you think the kind of commodity market is going to go in terms of what is most valuable? You're talking about gold, but what, hard assets like those, what kind of commodities are you invested in right now?
So I actually am not investing in any commodities.
Okay.
I have become fascinated by tech companies, and every time that I invest, I try to look at the future, and I'm trying to am I still live? Hopefully I am.
We're with you.
It just paused for a second. So I look at where is this company going to be, or where is this asset going to be in 10 years, in 20 years, in 50 years? Where is humanity heading? And that is how I make majority of my investments. And I mean, again, I did marry a rocket scientist, so he fills me in on artificial intelligence and data science and all these super fascinating things that we're moving towards. And so that's the reason why I'm a little bit more tech heavy and less commodity, like things that don't go, again, as I said, everything that you invest in, you're supporting. So being from Iran, which is one of the biggest oil countries in the world, and is really suffering, the Iranians, because of this whole war over oil.
Yeah.
I am not the biggest fan of oil. I don't invest in it. I don't think it has a room in our future. I hope it's just going to go away, because that is when Iran is going to become free. So I don't invest in it. Gold, as I say, I prefer to invest in Bitcoin. But again, these are all personal, and you really have to do the education, do the readings, and read about it and see which part of it you stand, and then it really becomes some sort of a statement when you start investing, which is powerful too, because not only your money is growing, and I'm not saying you're not going to ever make money on gold, you probably will.
Yeah.
But I prefer to support the thing that is making me money. So that's basically where I stand.
I think it's beautiful the way it's important to understand that where you're investing any resource, whether it's your attention or your energy or your money, it's a political statement.
100%.
Yeah. So talking about that political statement, what are you investing in artificial intelligence that you think actually is responsible in terms of ethical artificial intelligence? Is there such thing?
Ethical. So the thing is, all these companies, they try to sound ethical, right? So they're doing it for the good of the humanity, and we are headed in that direction. Google, Facebook, Amazon, all of them are using it. TikTok is using it. very
heavily.
So that's why my husband's like, don't use TikTok. I'm like, yeah, sorry, no. So I do it.
What does he tell you? What does he tell you it's doing? There's federal.
They are doing facial recognitions. They're doing everything so that eventually they can use it, I don't know, for you or against you. And the thing is, at this point with TikTok, it's giving me so much joy that I'm like, you know what? They can use my facial hair. They can use it.
You're willing. You're giving your face for the future good of humor and humanity.
I don't exactly. So that's the problem. Like for him, he thinks, because TikTok is a Chinese company, and he thinks that Chinese, and I think we are going that way anyway. China is going to take over, and he believes that the U.S. is a little bit more responsible. And this is no offense. I'm not trying to offending any of the Chinese, but this is just the political things that are going. I don't think the U.S. is the most responsible. Like, dude, like the U.S. attacked, like they probably were responsible for the Iranian government throwdown in 1979. So the U.S. is not they're not the most responsible. No country is the most responsible. So that is what I've come down to understand. And China probably is going to use all this data that they're getting some way. I don't know. And right now, politically responsible, this is going to be interesting. Microsoft, I think they are. Again, and I know they're getting a lot of backlash. Like Bill Gates, he's not on the head of Microsoft anymore. But
no, he's not the head of Microsoft anymore.
But like people are, the conspiracies are going about him that he's the evil guy. Like there's so much opinion right now, and I'm not here to tell you you're right or his. Because this is going to go like completely. It's going to go the other direction. If you don't want to give Bill Gates any of your money, then probably don't invest in Microsoft. I happen to think that he actually cares about people. That's just my opinion. So again, as you said, any investment is going to be a political statement. So be aware of
it. It is. Yeah. No, I mean, I think that's a really important. So is there any tech that you could tell us about in terms of AI that you think is like doing that actually is so far it seems to be responsible, or it's just, I mean, I think that's the Wild West as well.
It is. And the thing is, all these corporations, you have a business division and then you have the consumer front division. So for example, one of the companies that the head of it, the CEO is such a nice person, and I feel like he does care about his employees and the environment and all these things, is NVIDIA. So NVIDIA, it's not a front end company. They partner up with other companies. One of their partners is Lockheed Martin. Now, Lockheed Martin is a defense company. What do they make? They make bombs and rockets.
Yeah.
So, like, it's very complicated.
It is.
So sometimes when it gets too complicated, I just look at the person. I do some deep, as long as it's not like I'm not strongly opposing what they're standing for. I'm like, okay, all right, I'm going to invest. But if it's complete, like oil for me is like, no, I'm never going to invest in oil because it's personal.
Yeah. Yeah.
So,
and do you feel like there's two, is there like, is it not worth it if you don't have $15,000 to start with? Like, give some starter, because I was talking to my my stepfather, who is invested heavily in NVIDIA and also was so cute. He was like, yeah, we invested in this Canadian company like a year and a half ago or 2 years ago called Shopify. And they have made so much fucking money. I'm so proud of him. I mean, I'm really proud of him. He's an engineer, but he's retired, and he's doing their whole portfolio, and he's a tech guy. So he did Shopify kind of a couple years ago, and they're making so much money. Anyways, but what was my original question to you?
How much to start with?
Oh yeah, how much to start with? Because his thing to me was like, oh, you need $100,000 to really make a difference. And I'm like, well, that's not helpful. What do you think?
So the funny thing is, the earlier you get started, the far way ahead are you going to be, even if you start with only $500. And that's how I restarted after I lost my money. I restarted with only $500, which is the amount that I could that was the amount that I was comfortable with. And I grew it to $53,000 over 3 years. I contributed. So you start with $500, then you can contribute to it on a monthly basis, whatever disposable amount that you have, but whether it's $20, $100 per month, you can say, hey, okay, instead of buying Starbucks coffee every day, I'm going to put that money towards my investment. Instead of buying an Apple phone, I'm going to buy an Apple stock. Like, then you become a little bit more aware of your expenses. And no matter how small you start with, we hear all these, like sometimes I hear so empowering stories, like about a taxi driver who started out very, very small back in the day, and now her account is like $1 million. Because at the end of the day, the market's all these ups and downs. I'm like, oh my God, am I going to time the market? Is it going to go lower? Is it going to go higher? Should I just wait for it? Should I buy now? Should I like buy in 2 months? At the end of the day, the market is going to go up after 10 years.
Yeah.
So even if you buy now today and it goes down another 100 points and then 1,000 points by the end of the year, in 3 years and in 5 years, you're going to be up. So start today, start the education first. And then as soon as you know how much you can actually put in, just do it. Just do it. The sooner you do it, the more successful you're going to be in the future.
And you feel like it doesn't really, like in terms of if you're going to go with a brokerage, it doesn't even matter who it is. It's just start.
Yeah. And the thing is, there are so many brokerages, even the bigger ones now, they're following suit. So the first brokerage in the US that stopped actually charging you a commission fee for every trade was Robinhood. Then the bigger ones like TD Ameritrade, Fidelity, they were like, oh my God, they were losing all their market share to Robinhood because nobody wants to pay commissions. Now you can just go with any brokerage as long as you are actually in charge of your portfolio. You're not paying any commission over your trades, which is awesome.
Wow. That's so great. And I think there's obviously a lot of newer, more millennial type brokerages that are more interested in social responsibility and sustainability in terms of investment. And I think that's kind of a trend we're seeing anywhere. Anybody in that space that you really like?
Yeah, so I mean, as I said, so Robinhood was one of my favorites. Webull is apparently, they have contacted me. I haven't actually looked into them as much, but there are like, I mean, the only one that they're very, very modern is Cheddar, and Cheddar for their information is kind of unbiased, and I do still read, Wall Street Journal, because you do want to have some sort of, you want to know what the market sentiment is.
Context, yeah.
Yeah. So I look at Morningstar, I look at Wall Street Journal, I look at all these things. I try not to listen to the hype and the FOMO, because then the rest of it is just buzz. But I mean, I keep it simple. I just have a Robinhood account, I have an Interactive Broker account, and that's it. And
I love keeping things simple. What do you think about real estate?
Did you see my TikTok? Is that what you asked?
No, I didn't see it. I didn't see it.
Like, I'm getting a lot of heat on that one. So real estate is interesting. Everybody's like, oh, real estate is so not risky. Like, if you want to not take risk, you gotta go into real estate. You guys, if you want to get started in real estate, you have to have that big cash. First of all, you cannot start with $500 if you really want to get somewhere with real estate.
Yeah.
Second of all, do you know that the real estate market has barely recovered from the 2008 market crash, whereas the stock market has tripled. Even now that is dropping. It's still way above. Just look at the trends. Like our house, we bought it 3 years ago. It's like a $1.5 million house. It's only gone up $25,000 in the past 3 years. And like, yesterday, we wanted to refinance our house. My husband was like, oh my God, if you had invested this money, $1.5 million, you know how much more profit we would have made? So if
Interesting perspective.
The funny thing is my sister is actually is in real estate. Her husband is, they make good money if it's your professional job and if you're like flipping houses and you're doing this and that. But even then, like if you're like renting, you have to deal with tenants and the mortgage broker and the lawyer and this and that. Oh my God, oh, the headache. And with stock, you literally just download an app. After you know what investment is going to be good for you, you just download the app. You just do the analysis. For me, it's only 1 hour per week for all of these assets that I'm covering right now.
Wow.
Which is over 100, only 1 hour, only on Tuesdays. I go live with my students and I share my portfolio. I just show them exactly how I'm analyzing. every asset, it takes me like probably like 5 minutes. I'm like, okay, da 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 da. And as you get better at it, it takes less and less. And that's it. And then I set buy limit orders. I don't have to time the market. I just look at the levels. I'm like, okay, I think it's going to go down to this level. I tell the broker, hey, when it reaches this level, buy from me. And then I go about my day. And then like 2 months later, the limit order goes through. I'm like, oh, yay, cool. And it's just a lot less stressful. Whereas my sister, every time she goes in it, and then the contractors, and then at the last minute, the deal falls through. And then she barely, majority of times, and she's very, as I said, she's actually the one who's really good at math. And she started like quantum physics and things like that. And then she was so stressed. And that's why at the end of then finally, I'm the youngest in the family. She's like 13 years older than me. And she never believed in what I did. She was like, because I was always dancing and like making goofy faces. She's like, whoever takes you seriously? Finally, after 10 years, she's like, all right, I give up. Can you manage my money? Can you put it in the stock market?
Hilarious.
And I'm like, yeah.
Good. You got to hold the pose and just, and keep doing what you do and keep educating yourself. And, I mean, that's amazing. There was a question about buying stocks like through an LLC. Is there a better reason to buy like through your business than to do it personally? Any ideas?
That would be I'm assuming it would be for tax purposes if you're buying it through your LLC.
Mm-hmm.
I am not an accountant, but definitely when you're investing in anything, whether it's real estate so real estate is a little bit better for tax purposes. So let me actually point that out. But even with stocks, there are so many things that you have to consider. So for example, if you're buying it through your LLC, you want to see if you can actually claim it as a business expense. I don't know.
Mm-hmm.
And also one very important thing that I forgot with assets, whether it's cryptocurrency, whether it's stocks, if you hold it over a year, if you're in the US, you have to pay less taxes on it as opposed to if you hold it within a year, if you buy and sell within a year. And the only time that you actually get taxed is when you buy and then when you actually take profit. That is a taxable event. Like, for example, if you buy Bitcoin today and you just buy it and don't do anything with it, if it's just sitting in your wallet, you don't have to pay taxes on it.
Yeah.
Once you sell it, that's when you have to pay taxes. So that's a very important point.
Yeah. And there's definitely some questions about the basically, are you investing in anything that you think is really going to help with the environment in the future? Any technology or any businesses that you feel like are really forward thinking in terms of environmental disaster and the climate disaster? Anything on that?
So I am a fan of Tesla. I know Elon Musk is just a little bit crazy, but so I do invest in Tesla. And the funny thing is with Tesla, and I have YouTube videos on it, you should go watch it. So Tesla, I think they have really good initiative. They have hardcore fans. We have Tesla. Like we have not only I invest in their stocks, we have Tesla. I drive a Tesla. My husband drives, and my 2-year-old daughter has a Tesla. So we are Tesla family.
What kind of Tesla does the 2-year-old have? I want you to be my mommy. What?
I have a video of it on TikTok. It's my husband got it for her. It's a tiny Tesla. It's like it's a
hilarious
Tesla car for toddlers.
For a toddler. Okay, of course. Can you be our mommy, Kiana? She's lucky,
so
huh?
one thing we want to keep in mind with Tesla is because Elon Musk is a little bit goo gaga, it goes in cycles. So I've been taking profit more often and I haven't been holding it long term. But I do support them by just getting in and then I take profit and then it goes up and down. So I buy low and I sell high. It's actually been very profitable for me, which is awesome. So Tesla is one of them. Again, Microsoft, I don't know, it's very cool. I'm not going to get into Microsoft. But I like
Microsoft people. We're getting a lot of Bill Gates hate, and I dislike the guy too. Yeah, I'm not into that guy. Although the IBM is. I mean, I think I can't remember now if IBM bought Vimeo. It's a mess out there.
It is. There's just so much, and I mean, it's just he's now and let's not get there because, yeah, we're not talking about coronavirus today. We're talking about
Yeah.
stuff. But I mean, just so you know, Microsoft is getting ahead very, very rapidly in AI. And I mean, from what I've seen so far, I mean, if you want to hit Bill Gates, that's fine, but Microsoft itself, from what I've seen, they have been responsive. I have not seen something that is factual that points to the other direction.
What do you think about, somebody's asking about Baron Wonder's book?
I'm not familiar.
Okay. I'm not familiar either with that. And how about the companies that you think are doing good for the environment besides Microsoft?
Well, Tesla.
Oh, Tesla. Okay, Tesla.
Well, I mean,
Um,
anything online. I mean, so that's the thing. So, for example, Amazon. If you think about it, they're actually being good for the environment because they're taking everything online, but at the same time, they're being super greedy and they're like
they
buying
are.
everything and they're buying everything. So there is a give and take in all of these things. Like Amazon is one of the like Apple. If you think about it, the products that they make is pretty good for the environment because you can do everything from home. Zoom is, if you think about it, is probably good for the environment because you don't have to go to work and you don't have to create air pollution. So I mean, everything is going to have a little bit of a bad and a little bit good in it. And at the end of the day, you're the one who's going to make the final call, whether the good is going to outweigh the bad.
Yeah. I mean, these things are very, very complex, but there was a question about Zoom stock. And do you think it's a good long-term investment? I think it is.
So yeah, so we talked about Zoom, literally just the second coronavirus started to become serious talk in the US, we bought in February. And at the time, I was like, I'm going to buy it now and I'm going to sell it like within 3 months. And I did. But then because I just wasn't sure yet how, because it's an up and coming company and they kind of got lucky with the coronavirus, but the coronavirus hit them that they were not as ready for it. They were not as ready for the amount. And it looks like they put themselves together very fast. And I was impressed by that in the past months because they had some issues, like some privacy
Yeah.
issues, all these things.
Yeah.
And then they pulled it all together and they're doing better. So I've been impressed so far. And I do believe that eventually the COVID-19 kind of has pushed us to a cultural change because a lot of these businesses, like my husband, he used to travel every single week, business class all over the world. And now the company is not losing any money and he's at home with our daughter all day long, not going anywhere, not costing the company any money. And just using actually Skype, I think, is what is doing. That's why Microsoft is also so Zoom and Microsoft, like they are competing in this area right now, right?
Yeah. Yeah.
So that's what you want to. But I think eventually these companies are going to get ahead, and I feel like that's the reason why Warren Buffett dumped all his airlines. I don't think he necessarily did the right thing. For someone who's younger, he is older, he's probably retiring and he just doesn't want to wait that long. And that is one thing that you have to consider. Like your age is super important.
Yeah.
So
Yeah, no, you have to consider kind of what your long term. I like the Zoom CEO. I think he's really smart and seems somewhat sincere.
yeah, so as I said, I've been at the beginning, it was like, I'll just get out of it once coronavirus is gone. They're probably going to go away as well. But then I was impressed, as I said, by their management and how they put themselves back together. So far, it looks like it's a good investment.
Yeah, amazing. And then just one other question that's coming up a bunch, which is around what books would you recommend besides yours, which we'll make sure everybody knows about your books. But are they, is there any mentors? Are there any blogs you go to? Is there anybody that you're watching in terms of this conversation that you could point people to?
So you're talking about investing, right?
Yeah, or just watching market standards and educating ourselves.
So, first of all, my books, I don't have a book about stock markets, which is weird. My power course and everything that I do is about the stock market, but all of my books are about everything but the stock. Cryptocurrency Investing for Dummies book has chapters on other assets too, but that's the funny thing. I actually don't have a book on this topic.
It's your next book. It's your next book.
I have a book. It's a self-published book for people who actually get into our course.
Yeah.
Which is 500 pages, and it takes you through all of it.
Wow.
But in terms of, so the markets, I'm so ashamed to say that, but like the books that I actually read, I'm not ashamed, but I read all the certified financial planning books and like the big level ones. And now I try not to listen to the markets as much because I go on TV a lot. Like I do go, like I'm on Fox Business. I'm go on, and I know, like they tell me to hype it up. They tell me to take a stand. They're like, okay, Kiana, come and hype up Bitcoin because we have this guy and they're gonna bash it. And I'm like, okay,
yeah, so, it's television. Yeah,
it's television. It's kind of like reality TV. So while it's great for me when I go there and it's awesome, I actually don't ever like listen to TV, Wall Street Journal. I only look at the headlines just to see what the market sentiment is. The books that I do read are actually entrepreneurial and success-oriented and mindset. Like the books that I have on my, right now, these are all the books. I have Jack Canfield, we have this book, I have Russell Brunson, all of his books right over here. So I'm an entrepreneur first, actually. Yeah. Just got this in the mail. I'm super excited. I'm an entrepreneur first and investor second. So my investing, as I said, I try to spend as minimal amount as possible because otherwise I'll become emotional about it. Yes. And the last thing you want to get about investing is emotional. You want to be emotional about your business and entrepreneurial and your feelings and success and goals, but investment, you want the minimal exposure. So I actually don't have anything for you. Sorry.
But those books, can you give me the names of those entrepreneurial books you're reading?
Yes. Oh my God. All right. So the books that completely changed my business started out with .com Secrets, Expert Secrets, and now Traffic Secrets. This is the new, these are my third, I gave away my other ones. This is the new edition. So I had .com Secrets obviously in 2016 and then Expert Secrets. So this is, Russell Brunson is my mentor. I have coached with him. I was in his circle and everything. And he's awesome. I'm a big fan of Tony Robbins. I have interviewed Jack Canfield and his new book, The Success Principles. This is awesome. I'm a big fan of The Secret. So, and another person, where did I put the book? Actually, one book that it is personal finance related. Smart Women Finish Rich. Sorry.
Smart Women Finish Rich. That's cool.
So this book is financial planning oriented. The only thing about this is that at the end of it, David Bach is a financial advisor. So he wants you to go to a financial advisor. That is the only thing that I don't agree with them. But a lot of the things in this book is actually pretty cool about actually empowering women to understand why they should invest. So I like this book. And I have like books all over here. Let me see what we have here. Fundamentally, this is a little bit big. But this is what
I love
this
big book.
Might be a little bit. This is like 1,000 pages. So fundamentals of financial planning. This you can skip this one.
Yeah, you did that work. Just we'll take your work on that. Amazing. And tell people how they can find you. Thank you so much, first of all, for offering everyone your 101 course. That's so sweet of you. How can people find you?
So I'm all over social media. Just be aware that there are a lot of fake accounts on Instagram. I think they finally took them off. So just go to investdiva.com. That's the best.
And everything's there.
And then I have all my actual social media listed there, so that you don't go to the other people.
Yeah. Okay, good. And thank you for being a badass mom and for breaking down some of these barriers to entry for us. Thank you for coming on today and just offering your incredible wisdom.
Of course. Thank you so much for having me. This is fun.
It was so fun and good to meet you. And take care. I'm gonna have to go on TikTok and see the Tesla toddler car. I think that'll be my starter car, even though I won't be able to get in it. I think that's like will be my like starter. Amazing. Take care.
So
Nice
much.
talking with you.
Yeah.
Bye-bye. Thank you so much for listening to another episode of Reality Riffing. These are conversations that I think are important with people who are doing great things in the world about subject matters that need to be discussed. If you enjoyed the content, the conversation, please feel free to share with your people, share with your friends and family, rate the podcast below, and also subscribe.